Live from Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Oil prices plunge on fears of a global glut after OPEC Plus stuns with bigger output hike at a time when demand is challenged by Trump's trade war. We'll be speaking in a moment to Fereidun Fesharaki, known for his pioneering oil and gas market analysis. He'll share his view on the cartel's seismic shift to sink prices. Bloomberg learns that representatives for Indian billionaire Gautam Adani met Trump officials about dismissing the U.S. criminal charges for bribery. Exclusive details just ahead. Meanwhile, Warren Buffett shocking global investors, fans, and even his own board by saying he plans to step down as CEO of Berkshire Hathaway by year-end. We'll discuss his legacy and the firm's future under Greg Abel, who has to build on a 5.5 million% gain in Berkshire's stock and decide how to deploy a $350 billion cash pile. Well, it is a sinking feeling in the oil market. We have WTI crude and Brent crude currently trading lower, down by almost 4% as we speak, of course, extending the declines we've seen in recent weeks. OPEC Plus, of course, agreed to boost output by over 400,000 barrels a day. And we have the likes of Morgan Stanley cutting its Brent price forecast by $5 to $62.50 for Q3 and Q4. Goldman, not to be outdone, cutting its Brent prices forecast by $2 to $3. It sees Brent averaging $60 per barrel this year. Take a look at where we are in terms of Brent crude and New York crude in negative territory, again, extending those declines we've seen in recent weeks. Well, our next guest is well recognized worldwide for pioneering oil and gas market analysis and studies of the Asia-Pac and Middle East energy market since the early 1980s. Let's bring in Fereidun Fesharaki, Chairman Emeritus at International Energy Consultancy, FGE. Good to have you with us. Perfect timing having you here in the studio.
Absolutely.
How are you reading into Saudi Arabia's move to ramp up production?
Well, we have to look at the oil market as oil market is a small ship in the middle of a turbulent ocean. The turbulent ocean created by all of the tariffs and all the Trump various plans and procedures, but it has its own problems. So in one way, OPEC can control its own destiny partially, but cannot control its own destiny fully. And to try to control its own destiny, OPEC has been trying to balance the supply and demand and find that continuously problem with the overproducers, Kazakhstan and Iraq, and really they have no choice but to let the prices go and teach the market a lesson. Best cure for lower prices is even lower oil prices.
But is it just about getting Kazakhstan and Iran back in line? Isn't it also about politics? Isn't this Saudi Arabia trying to be on the right side of Trump?
I think President Trump wants the oil prices to go low, but not too low. I think the prices in the 50s would do serious damage to the U.S. production, and U.S. production will fall. We expect U.S. production to grow a couple of 100,000 barrels per day this year before peaking in 27. But if the prices are low, they would start falling right now. So I think President Trump will be calling the Saudis and ask them, please, don't let the prices go down anymore.
So essentially, Saudis are trying to have their cake and eat it, right? Trying to balance the market, also trying to get rid of the excess supply from U.S. producers, for instance. If prices go really low, they'll be forced to stop production.
Yes, I mean, really, if you put yourself in the place of Saudi Arabia, what they do makes eminent sense. Like you said, hits several targets. I don't believe this is a long-term strategy by any means, but the strategy could be a few months, 6 months, and then the strategy will change by the request from the White House, by the overproducers learning a lesson, and by the markets coming into more balance. So the ship can only go so far. The rest of it depends on the global Will we have a global recession or not? Well, if tariffs continue, yes, we have a global recession.
How do you balance the market? At what price would rebalance this market, according to the Saudis?
I think prices $65, $75 is something which can balance the market. $70 and higher are certainly doable. The market is tight. The fundamentals are good. The inventories are low. This is not a loose market which is falling apart. Contrary to what we read from some of the journalists here or there, this is a strong market. So if you want to do this, this is the right time to do it.
Well, Fereidun, looking at where oil prices are right now, it is exactly where the Saudis want it to be for a balanced market.
Well, the markets move by its own forces. As I said, it's a little ship in the middle of the ocean, but all the turbulence outside can drive the prices lower. But it's not a long-term strategy. It's a strategy which is right for today. This is the right timing for it. And if I were them, I would do exactly the same.
Obviously, prices under a lot of pressure. Where do you see prices headed in the next few months? I mean, some are already saying perhaps sub 50 could be something we are looking at.
Well, if there is a recession coming, which will come if we don't undo the tariffs, the prices can go sub 50. But if there is no recession and the market is relatively performing well, then the prices would be in low 50s. And the balance will come by itself.
How much is China a factor in all of this, bearing in mind that its growth projection has been cut by a lot of the banks? Some see growth perhaps below 4%. China itself says it'll be around 5%.
Well, the Chinese economic growth doesn't really directly impact oil demand. It's the EVs which impact oil demand. So the EVs have first led to a peak in diesel demand, and also using a lot of LNG for tanker transport. Gasoline will peak in 25, 26, but the demand for naphtha, the demand for jet fuel, the demand for bunkering continues to go up. So maybe a peak in 2-3 years from now, but no collapse in demand. There is going to be sort of sideways. But if you have a growth rate of 5%, that doesn't necessarily mean that the demand will jump. It will do better, of course. But at the moment, EVs are driving the Chinese oil demand rather than anything else.
What happens to demand when growth is 4%? No impact at all, if you're saying that it's solely dependent on the EV industry in China?
Maybe it makes a 50, 100,000 barrels per day impact. If it also grew by 2%, maybe 50, 100,000 barrels per day, less impact. But most of the demand impact is coming on gasoline and diesel, and mostly because of the EVs and use of LNG tankers.
Am I right to think that if oil prices were to drop further, you'll see an increase in demand from China?
I think a little bit of increase in demand, but you will get a big increase in demand all over the world. All of Asian countries, the demand will increase. Latin America will increase. Africa will increase. Even in Europe and US, the demand will increase. So lower oil prices will lead to increased demand and lower oil production. There is no escape from it.
We know that the Saudi Arabia has a close relationship with Russia. You've got to think about how Russia is looking at efforts by the Saudis to actually ramp up production and lower prices. Bearing in mind, of course, the Ukraine war is ongoing and Russia needs the oil revenues to actually support that war.
Well, of course, the result of this kind of agreement is the Russian oil production will go up. So maybe lower prices, but not necessarily much lower revenue, because the total money coming in will be impacted by a higher production. And the same with the Saudis. You sacrifice as far as you can, and the Saudis and the Russians are on the same page. There is a good understanding and read of the market between them. So it is something that they have thought about it, and they've come to agree on it, and it is not going to be a shock to the system at all.
So you're saying the Russians are in line with the Saudis?
Oh, absolutely.
What are some of the key things that you're looking out for that will shape and dictate the prices in the coming months?
The number one issue is the demand that Trump policies. Is again, the ocean, and the ship is inside the ocean. You can navigate it towards the place that you want to go but you can be taken away by the waves of the ocean. If the tariffs continue and they are not rescinded, then the demand will fall worldwide, economic growth will fall. The US will go into a recession. There is no doubt about it. That then would impact the demand. So I'll be looking at Trump policies first in assessing the demand rather than anything else.
As it stands now, do you sense that Trump will ease on his tariff policy? We're already seeing a softening, for instance, in conversations to do with trade between the US and China.
I think there is no choice. If you continue these policies, you create a global recession and you hit US most. And, he said the first quarter poor performance is because of Biden, but he cannot say second quarter performance also because of Biden. He has to take responsibility, and I don't think there is any possibility that these tariffs can continue long term.
Let's talk about the LNG sector. We've seen prices on a downward spiral as well. What do you make of that?
Well, they are governed by different forces. Most important factor in the LNG market is, again, tariffs in China. The Chinese, they don't want to lift the US volumes anymore because of the tariffs they imposed. But also there are discussions about reducing the inventory requirements in Europe, which can make a very big difference in the market. The prices at the moment, $10, $11, $12 spot prices are weak. They are not disastrous. But this market will go through a very turbulent change. By the end of this year, we expect the prices to go higher. And by 26, 27, we expect the prices to go substantially lower, because the supply increases by 50% in 2-3 years. The global market has never seen anything like this before.
How much higher by the end of the year, and how much of a drop after that?
By the end of the year, the prices could go 50, 60% higher than they are today. And 2 years from now, 3 years now, they can drop by 60, 70%.
Not too long ago, we were talking about an energy crisis as a result of the war in Ukraine. Is that over?
Well, if there is a peace between Ukraine and Russia and some volumes go to Europe, then that's bad news for the LNG prices in Europe. But I don't think anybody seriously believes that a peace can come and everything would be hunky-dory after that. So I think that the market will go by its own force. And the economic growth, Trump policies, again, are the dominant factor in the demand side, and they will impact very much the
Of course, this is also an environment where there are expectations the dollar will go weaker from here. It's already seeing, we've already been reporting today about how Asian currencies have, been on the upside, some seeing at record levels. How do you think that will play into the oil market?
Well, tell me about it. We all bill everybody in US dollars, and we spend Sing dollars and British pounds. So I think that as soon as the policies on tariffs are reversed and there is some order in the market, I think US dollar will gain and things will come to a balance. But pushing this path that we have today is towards a disaster.
Fereidun, always a pleasure to get your insights. Fereidun Fesharaki, Chairman Emeritus at FGE. Now, meanwhile, President Trump continues to keep investors guessing about his tariff policy. He suggested that some trade deals could happen as soon as this week. Speaking aboard Air Force One, Trump said it will be up to him, not the other countries, when such deals are completed. The president didn't specify which countries were closest to securing a deal. He also signaled his aides were speaking with their counterparts from China while insisting on concessions from Beijing.
Well, I want a fair deal with China, but China's been ripping us off for many years, so maybe something should be thought about, a little bit of retribution. China's been ripping us off for many years, ever since they started.
Now, earlier, Trump also told NBC he was willing to lower tariffs on China at some point because the levies are so high, the two countries have essentially stopped doing business. He praised recent statements from Beijing as positive. China said last Friday it was assessing the possibility of trade talks. And amid uncertainty over Trump policy, investors are placing an extra risk premium on U.S. assets. The dollar is the worst performing G10 currency this year. It's also led to a surge in Asian currencies in the past week. Abel Hong is here to break things down. Abel, to what extent are further gains expected for Asian currencies, especially on the back of expectations that dollar will continue in its weakness?
Yeah, Asia's currency surge very much expected to continue. The dollar slump against the backdrop of these hopes for trade deals. And I think our MLife strategist Mark Cranfield put it best. We've been through the first phase of dollar losses, and that was against the G10s, and now it's kind of spreading to the EM. So Asia currencies today are the ones that are surging. A bit of complication because onshore markets are still shut, and that typically provides a sort of anchor. But where the attention really is in the Taiwan dollar. We've seen it surge by the most since 1988 to the highest level in about 2 years. And of course, if you look back to Friday, we saw it the most traded in terms of the NDFs. It does look like Taiwan dollar shorts, which were being used as a way to hedge against a protracted US-China trade war, those trades are now being called flat-footed, wrong-footed, and that positioning has a lot to do with the moves in the markets today. But flip the board, I also wanted to rake through what we're seeing in the dollar specifically, because we've been seeing it slumping regardless of whether tariff concerns have been intensifying or whether they've been easing. And one good example would be last Friday, where we saw the upside to the jobs report. The yields rose, but the dollar still slumped. So the dollar is not benefiting from the high yield advantage. So that is a relationship that seems to have broken down, and it does give you the sense that even with a softening in the US-China's tariff stance towards one another, that the sell America sentiment, that is still very much intact. Has.
That's right. US exceptionalism in question. Abel Hong, thank you so much for that. Let's do a check on markets again, especially assets in Australia as well as Singapore. On the back of the elections we saw over the weekend, of course, we saw a swing to stability. Albanese's Labour government seeing a landslide win, along with Singapore's ruling party, the PAP, winning 87 of 97 seats in election. It does seem like voters want stability in light of the trade war that we're seeing in the world today. Take a look at where we are in terms of the STI, currently flat, slightly in the negative, down about 1/10 of 1%. The ASX 300 index also down, lower by about 0.8 of 1%, pretty much in line with the rest of the region. Of course, their currencies in focus. The Aussie dollar currently trading 64.64, up by 0.5% versus the USD, and in terms of the Sing dollar, also trading higher by about 0.5%. Well, still to come, a closer look at what lies ahead for Berkshire Hathaway after Warren Buffett announced he'll be stepping down as CEO. We'll discuss that with our panel of guests just a little later. Plus, a shock plot twist for Hollywood as President Trump announces 100% tariffs on films produced outside the US. Much more ahead. Keep it here with us. This is Bloomberg. Welcome back to Insight. Bloomberg has learned that representatives for Indian billionaire Gautam Adani met with officials from the Trump administration about dismissing the criminal charges against him. Sources say the talks have intensified and could soon lead to a resolution. For more, Bloomberg's Pierre Sanjay joins us from Mumbai. Sanjay, what else do we know from developments?
Thank you, Haslinda. This is a developing story. Hectic lobbying, high pressure conversations are progressing right now. Representatives of Adani group, the port-to-power conglomerate, are progressing. The lobbyists and the legal representatives are in touch with DOJ officials and White House officials, and they are trying to convince. They are expecting. They are hopeful that this case, the criminal charges against the chairman and his nephew and few other executives will be disposed soon, which will have a positive implication on the group. And they clearly are saying that there's no charges against their company. It is against their rival company, and there's no listed companies being named. And with this current legal loopholes or legal clauses, Adani group is expecting, and the lawyers and lobbyists are expecting the case will be in favor of Adani, as I suggested earlier. This is a developing case because the discussions are still actively progressing. It has started in January and it has got a little bit more strengthened in February and March. It got intensified, and we are expecting hectic. It will have more legs in coming months, and they are expecting a kind of a disposal, or the criminal charges will be waived off or will be stopped in a month or two. And Adani Group is also heading towards their annual general meetings in next 2 months. So they are expecting, they're hopeful that there will be clarity in coming 2 months, and they are expecting a favorable reply or favorable decision from White House soon, anytime soon.
So the talks are gaining momentum, Sanjay. The question really is, what arguments are being put forward by the Adani Group, by the Adani team, that could possibly help them?
Since beginning, they've been maintaining their stance very clear that there is no allegations against the listed companies, and there's no criminal charges, there's no fraud which is committed by these indicted people. That's what they are saying, and it's not about their company, but it's about a rival company, and they've been party to it by mistakenly, and they are saying that they're cooperating with all kind of investigations, so-called investigations, and they're very clear about from the day one there's no charges level against any criminal charges level against the indicted persons, including the chairman Gautam Adani and his nephew and few other officials. And they have not written formally because they have not been asked to do so. But the lobbyists and the legal representatives of Adani Group are talking to DOJ and White House officials to clarify their stance, and they're expecting a positive reply soon.
We know that Adani has a strong network in the U.S. How is Adani mobilizing the people there?
Adani has actually have committed a huge investment of 10 billion immediately after Trump has won the elections, but now that is put on hold, and he's mobilizing all his might over there, and he's appointed high-profile legal law houses and lobbies to gain momentum, to increase, to make their sound heard among DOJs and White House, and they have hired the top-notch high-profile legal representatives to put his case across. And it is what we learn late is that it has been gaining momentum, and it's going in the right directions. That's what we're picking from Adani camp at this point of time.
We know that Adani is a wealthy man. He's worth more than $70 billion. I'm just wondering, might he use that wealth to perhaps invest more in the U.S. to placate what's happening right now?
At this point of time, an investment in the U.S. will be like, it's kind of a impossible thing with kind of investigation going on. So, but what we are picking up for the camp is once it's cleared from all these charges, he would reconsider investing in the U.S., which is a very normal course. And and also in between, there were a lot of U.S. investors have got the shown interest or confidence by taking part in some fundraising of Adani Group. That is also helping them, because that is also creating a positive narrative. And most recently, Indian Prime Ministers also shared or blessed countries to only the biggest transshipment project. That is also helping to create a positive narrative for Adani Group at this point of time.
Sanjay, thank you so much for that. Bloomberg Conglomerates reporter, PR Sanjay there. Now, still to come on Insight Live. After the Oracle of Omaha, we look at the future of Berkshire Hathaway as Warren Buffett names the date of his departure. Our expert panel weighs in next. Don't miss this. This is Bloomberg. Welcome back. You're watching Insight. Legendary investor Warren Buffett waited until the final minute of his 60th shareholder meeting to announce his plans to retire, shocking investors, fans, and even his own board. The 94-year-old architect and face of Berkshire Hathaway is ending a historic run, turning what was a failing textile business in the 1960s into a corporate behemoth while delivering a 5.5 million% in gains per share to investors. Taking over the $1.2 trillion giant will be Canadian-born energy executive Greg Abel. He faces plenty of questions over his plans for Berkshire. Well, chief among them is plans for the almost $350 billion cash pile Buffett has accumulated while largely sitting out the volatility of the past few years. Joining us now from Spokane, Washington is Todd, Finkle, author of Warren Buffett, Investor and Entrepreneur. He's also the Piggott Professor of Entrepreneurship at Gonzaga University. And also joining us from Omaha is Bill Stone, CIO at the Glenview Trust Company. Glenn, good to have you with us. Bill, let's start with you. I'm just wondering, how are you reading the timing of that announcement? You know, I mean, we see its stock at record high prices. Well, it couldn't be a better time for that announcement.
Yeah, and I guess I taken even from last year's meeting that it looked very obvious to me that Greg Abel was running most of the operations day to day at Berkshire, and Buffett was very happy with that. I think spending all of his time reading and investing rather than getting involved in the management, which he tends not to do a lot of that or tries to do very little of that as possible. It still shocked me a bit that he handed over the reins to, or is saying he's going to hand over the reins to the capital allocation, just because I know, or from reading everything, that's what Warren Buffett loves most of all. But it probably makes most sense for the company. He is 94. We all only have so long, and I actually, as a shareholder, like that there's going to be some amount of overlap with Todd being, Greg, I'm sorry, being in charge of capital allocation.
Todd, why are we even surprised? His 94 is a long time coming.
Well, I was a little bit shocked, but I kind of saw it based on the things that were happening in the meeting that it just didn't make sense. A lot of the questions that were being asked that he was answering were more on personal growth. And he had all these young people asking questions like about life, and what should I do and all that stuff. Now, he's had that before at meetings. I've been to 15 meetings, and usually they're a nice change from what's on the balance sheet, And but to me, I've written this book, and I've taken tons of students to go visit him and been out to lunch with him 3 times. And my students all say the same thing, that the best thing that they learned from him was how to be a better person.
But Todd, what does it mean for the company?
For the company, Greg's been there for like 26 years, and he is a vice chairman already, and he's just going to take over Warren's position. I think he's going to do a great job. He's been mentored all these years. I haven't heard one negative thing about Greg Abel. Not one negative thing. But
Bill, Greg is 63. Most CEOs are thinking about retiring at that age. And there are expectations that when the stock starts trading today, it will go lower.
Well, I think the one thing you have to know about, certainly a lot of people at Berkshire, and I'd say it stretches to a lot of us investment people, is we hope to never retire. I can, at least that's the way I feel. So you can certainly go on for a long time, right? He's got at least another, 32 years, right? So he has some time. Certainly, if the stock might be indicated lower, it certainly adds to some uncertainty. We all knew this day was going to come at some point. Like I said, I think if you're a shareholder, you feel good that it happened before, I'll say it, quote unquote, had to happen. Because really, as I looked at Warren Buffett during that meeting, he's still very sharp. His mind is extremely sharp. He actually looked to me to have more energy this year than he had last year. And I think part of that was, of course, Charlie Munger passing away not long before the meeting last year. So I think that was a little bit of a downer. But for a 94-year-old guy, he seemed, very energetic. Maybe he was also excited to pass along the news in the end. But, I'm optimistic. As long as Greg doesn't try and be Warren Buffett, I think he'll probably do just fine.
I don't think anybody can try to be Warren Buffett. He is irreplaceable. Todd, I'm just wondering your thoughts on how Greg Abel will manage the company.
Are you asking me?
That's right.
Oh, okay. How will he manage it? I think he'll manage it very similar to Tom Murphy's methodology, where, and that's what Warren Buffett went by. He was on the board of directors, and he learned a lot from Tom Murphy. That was probably his number one mentor, which is decentralization and buy quality business and hire the best people and leave them alone. Most companies don't do that.
And how do you see him managing the fund? It's a huge fund, and there are some expectations that perhaps, it is the cash pile that is in focus the most.
I'm not sure what he's going to do with that. I would imagine he's going to focus on energy to begin with, because that's where his biggest expertise is at. $350 billion.
Yeah, I think he's going to do the same thing, keep looking for opportunities. Just, I can't say just like Warren Buffett, but certainly, at least for now, right, Warren Buffett's still around. He's got Ted and Todd that also look around for opportunities. So, as Warren Buffett said multiple times during the meeting, just really said, these opportunities come, irregularly. So we're always on the lookout. At least he's got the money to do it. I suspect, let's just say, they're eventually, when Warren passes on, et cetera, if we don't start to see some deals, I do think they might start a dividend. I don't think there'll be a dividend out of Berkshire Hathaway until Warren Buffett is gone, but it is certainly possible if it goes, I'll say, quote unquote, too long at some point.
Is it good enough for you? Is it good enough for an investor like you? We're talking about $340 billion in cash, and $40 billion is added every single time.
Well, I think they've earned the right to, I'm happy to let them have that capital because, they've earned in the past the right to use it. They've used it correctly. And, obviously, as you pointed out earlier, the historical returns, and even Buffett talked about that, at some point we'll be happy that we have that cash around because there will be a multitude of opportunities. We can't say when that'll be, but we should be happy. Again, though, once Warren's gone, it gets a little tougher because I'll say no mortal manager out there in corporate America gets as much of a leash or as much room as Warren Buffett. And rightly so. Again, he earned it.
Hey, Bill,
Todd, talk to us. Go ahead.
Sorry. I had a question for Bill. What do you think Warren's going to do? He's not going to retire completely. There's no way. He started work when he was 4 years old. I'm assuming he's going to continue to go in, right?
I absolutely think he'll stay. He didn't say it. I assume he's going to keep the chairman title, and he said he'd be around there to help. So I'm assuming essentially that's what it means. He's going to stay and do what he loves best, right? Which is read.
I don't think he's going to be the chairman.
Oh, really? It may be, but I think he'll be around. I think you're right. I think he'll still come into the office. Either way.
He'll be like an advisor or whatever you want to call it.
Probably play the part like Charlie Munger did. Before. I'm just wondering, Todd, talk to us about the key takeaways from Buffett's investing philosophy. He has changed the way investors think.
Yeah, I have 3 chapters in my book that talks about his value investment philosophy. He looks at qualitative and quantitative things, and he this is kind of funny. They say that he uses the discounted cash flow, but Charlie Munger always said that he's never seen him use the discounted cash flow method. So I think that it's part art and part science when you're trying to figure out what the value of a company is. And at lunch, I tried to figure out what his method is, and he just said the discounted cash flow. That was it.
What's been outstanding, Bill, is the kind of returns we've seen from Warren Buffett. I mean, take a look at the numbers. It's pretty mind-boggling, right? 5.5 million% returns from 1964 through 2024, when the S&P returned 39,000%. Annual gain, an average annual gain of 20% versus 10 for the S&P. Post-Buffett, Bill, are we likely to see that kind of returns again?
No, and you weren't going to see those returns even with Buffett. He actually gave a great quote at the meeting this year, saying, you know, size is one of Berkshire's biggest enemies. You know, it's now the 6th largest company in the S&P 500. You just can't grow it that fast anymore. I think, you know, any of us should be happy if it can keep up with the S&P over time. And there's nothing wrong with that, because you've got a combination of an extremely safe company, you know, and maybe it can squeeze out a little bit more than the S&P. We'll see. But again, I think you have to set your expectations correctly, because the real positive for me is I can go to bed every night knowing this company is going to be absolutely fine, essentially no matter what happens. You know, we could have a absolute, you know, like we've had before, financial meltdown, and it will be left standing, and frankly, we'll get to take advantage of it. So that's the differential.
So in terms of strategy, do you see any change at all, especially given the Trump administration's tariffs for the next 4 years, perhaps? Will there be, you know, a tweak in strategy, the way they look at where to invest?
I mean, my guess is they'd probably look to take advantage of it if some company got in trouble because, you know, tariffs crimped it bad enough that, you know, I can envision a situation that a company maybe had a little too much leverage, et cetera. They've got to move production somewhere, need the capital to make that happen. You know, those are the kind of things that Berkshire Hathaway is made for, right? Is to take advantage of dislocations and when people, you know, hey, does it get in trouble, especially if it's a otherwise good business that maybe somebody, you know, something went wrong, et cetera. You know, so in that sense, I don't think that's a change. I think that's just doing what they do best.
Todd, do you see changes in terms of how the company thinks or how it is managed?
I don't know the answer to this, but I would imagine that the Ted Weschler and Todd Coombs, who both are CIOs for Berkshire, will get a lot more money to manage and to invest, because Buffett's going to be out of the picture. And I think right now each one of them only has like 15 or 20 billion that they're managing. So again, I don't know. That will change under Abel, the capital allocator.
You also have to wonder how Berkshire Hathaway will look at investing in Asia. I mean, we know that Warren Buffett was among the early investors of BYD back in 2008, investing, you know, buying 10% of a stake. Is there a perception perhaps that, you know, the new leadership will look at Asia differently? Bill?
I think I know Warren and Charlie both loved China, and they always said, and this is one thing that I repeated to people, why can't China and the United States get along? You know, it's to both of our benefit to get along. You know, so I don't know what else to say about that, but certainly there are a lot of opportunities over there and in, you know, Asia, the Asia market.
I would guess
Bill?
that they are probably. I would guess that Warren Buffett would be more drawn. I mean, he has talked about it. Certainly, his affection for the Japanese trading houses. You know, he talked about them at length here at the meeting this year. I do think he's probably a little less excited about China. Certainly that was more of a Charlie Munger side of the equation. I just suspect he's a little maybe more worried about, rule of law or being able to, have the direct ownership relative. But again, it hasn't stopped him at times, like you mentioned, that BYD was really came from Charlie Munger, but he still did it. And I know he's owned some other Chinese stocks in the past, or at least one other one before.
Bill, how do you look at... Go ahead, Todd.
I was just going to say, I thought that they owned Alibaba for a while.
I don't think that was in the. I know Charlie Munger did personally, and he may have had it in the Wesco portfolio, but I don't believe it was in the Berkshire portfolio. But I could be wrong.
Well, gentlemen, thank you so much for that. Todd Finkle, author of Warren Buffett, investor, entrepreneur, also a Piggott Professor of Entrepreneurship at Gonzaga University, as well as Bill Stone, CIO at the Glenview Trust Company. Now, let's do a check on the Indian markets. Been trading for just a couple of seconds. Take a look where we are in terms of those Adani stocks in particular. Sources saying that Adani representatives met with Trump officials aiming to dismiss those criminal charges levied against Adani in overseas bribery probe there. We are seeing gains for the benchmarks in India. Adani Enterprises also in positive territory, currently down or currently up by 0.7% along with its other stocks. Adani Power trading up by 0.7%. Now, still to come, the plot twist Hollywood didn't see coming. We'll look at the impact of President Trump's plans for a Tinseltown tariff. Keep it here with us. This is Bloomberg. You're watching Insight. President Trump says the U.S. will impose a 100% tariff on all movies produced outside America. Sources say this comes after a meeting with U.S. Special Ambassador to Hollywood, John Voight. In a post on Truth Social, Trump told his followers the process will begin immediately. Let's go to Los Angeles and bring in Bloomberg Managing Editor Lucas Shaw. Lucas, pretty left field. Where did this come from?
Well, Trump has talked, obviously, about wanting to bring production back to Hollywood. It fits in with his whole MO on the trade war, on his tariffs, where businesses that he feels are leaving this country he wants to bring back. So it's a little bit of that, and a little bit of, he's as we've reported, he spent a bunch of this weekend with the actor John Voight, his manager Stephen Paul. Voight is one of Trump's ambassadors to Hollywood who's supposed to figure this out. Now, they were proposing tax incentives to bring this back, but Trump loves tariffs, so that's what he's talking about.
The thing is, essentially what we're saying is that foreign movie production is a national security threat. How much of a basis is there for this to take place? Not
a lot. If you look at the data, the U.S. is a net exporter of entertainment, right? It produces a lot of film and television that it exports all around the world. Movie studios make more money outside of the U.S. than they do inside of it. Streaming services like Netflix make more money outside of the U.S. than inside of it. And the U.S. in general is a net exporter of film and television. So one of the concerns here is that other countries will retaliate, which would very much damage Hollywood studios. Now, the question, of course, is what does this mean? How do you put a tariff on a movie? What qualifies, right? Are we taking a movie that Disney produces, that it's filmed in London, but they finish here? Is that subject to tariffs? Or are we just talking about, Japanese movies that get released here? If it's the latter, it's far less concerning to Hollywood unless there is retaliation.
So still quite unclear what exactly will be impacted. We know, though, Lucas, that, when it comes to, making movies in international locations, they come with cheaper labor costs, right? The likes of Canada, the likes of New Zealand, Australia, they provide incentives for movie makers to come to the country to do business, to make movies. I mean, is that likely to go away on the back of the tariffs that we're likely to see?
Right. Well, look, again, it depends a little bit on what the tariffs are, but you make a good point, which is that the reason that production has moved outside of the U.S. is the same that a lot of industries have started to make things outside of the U.S., is that it's cheaper. I think one of the differences is that it's cheaper in part because of labor costs, but also in part because of incentives. And that is one area where it would be possible to work here, right? Whereas you could very easily say, most Americans don't want to make Nike sneakers, right? They think that they can get better jobs. Most people who work in entertainment in Hollywood would rather make their movies and television shows in the United States. They'd rather make them oftentimes in Los Angeles than in other parts, right? It would save them travel, it would allow them to stay at home, and the work still pays pretty well. And so the real question is, are there ways to bring that production back? Most people seem to believe that that would be creating incentives to shoot things here. I think even if you did that, you'd still have a lot of production happen outside of the US, but it is possible to bring more of it back. And it is worth noting that for Hollywood studios, they do still make more product in the US than anywhere else.
Give us a sense of how much of the business has been lost over the last 4 years. You alluded to that social post which Trump posted prior to his inauguration, saying that he wants to bring Hollywood back because it's lost its business in the last 4 years. How much has been lost?
I think the estimates show that, look, dozens of productions have moved that are made every year, right? So the U.S. share of overall production has gone down, let's say 10 to 20%. Most of it to places like the UK and Canada, places that are not that much cheaper in a lot of ways than the U.S. Like I said, the U.S. is still the biggest place that these folks work. But I remember, when there were fires tearing through Los Angeles at the top of the year, and I called around different studios to ask, what was at risk, or did they have to stop production on anything? Most of the studios said that they weren't actually shooting anything here at the time. So that does speak to the fact that a lot of production has left.
We know you're well ingrained in Hollywood, and you have insider information in a way. We're just wondering, what's the outlook for Hollywood and the movie business there under the Trump administration in the next 4 years?
Yeah, people are a little shaken by this, right? I got a lot of messages from folks today not understanding what it means and frankly concerned at how it would impact their business. I think initially, people in Hollywood didn't think that that a Trump administration would have too much of an impact on them. The parts of the media business that are in Trump's sights are more news oriented, right? We've seen Trump go after ABC, we've seen him go after CBS about their news broadcast. I think movie studios thought that they wouldn't be too affected. Obviously, tariffs can have a broader impact on the economy, and that can be dangerous. Or potentially productive. But this has people a little bit on edge as to what exactly he means and what it would mean for them, especially if other countries choose to retaliate.
Does seem like nothing is spared. Bloomberg Managing Editor Lucas Shaw, we thank you so much for joining us. Now, before we go, here's a look at our guests for tomorrow. The CEO of Indian hospitality giant IHCL will be joining us exclusively from Mumbai to discuss the company's growth strategy and the latest trends in travel. This is Bloomberg.